So this is from J. Brett Edwards. Good morning, Keith. As someone that joined mid-cycle and have been working to realign my portfolio better to sell the highs and buy to close the lows of the risk range. Okay, what is the best way to shift the portfolio to get timing back in alignment? I.e., if I sold midway up a rally and had tighter margins. So trading the chop is really hard. I will just say that it's something that I struggle with personally, actually, in terms of being just trading around the positions more quickly. I've gotten better at it as this chop bucket market has persisted over the course of the last few months here, and just making those decisions, understanding where to execute, that comes into play. I think to answer your question, I guess is sort of how do I get better, or from a timing standpoint, this is where tying in all the different tools in the toolbox or different tools from Hedgeye really plays a huge factor, right? So if you're getting ETF Pro, then you're getting a long and short list of ETFs in regards to the ones with the best signal, or sort of the outlook the signal matches the outlook that we have, right? So it narrows down the hunting ground and allows you to really focus in on some key areas to go execute. So then you also get the trend range there, and then if you overlay that trend range with like RTAs and what coach is saying in the coaching notes and where he's pulling the trigger in terms of either longs and shorts on the board, right? And I would say it's not necessarily like the number, although that is a big factor, right? I think before this call we had kind of two longs and I want to say it was around a dozen shorts, but I could be mistaken there. So anyway, my point is that what's that skew look like, and then inside that skew, kind of what are the style factors, the sectors that he currently has on the board in terms of being long and short. So I think that's a really good way of helping with the timing. Then also coming up with layering in, again, you got investing ideas too, right, which gives you the individual stocks, and again narrows down from a long and short basket, where which ones within our Hedgeye universe or scope of about 300 plus tickers, which ones have the best signals and match up with our kind of quad outlook. So I think that's a really good place of starting to do that. The bucket though is challenging, and that's where the immediate term risk range on the VIX, for instance, will help guide you, right? So like today, it's 17.72 to 21.11, and so like even if you. So again, for me, and I'm just going to talk about personally, because again, I've struggled with this as well. Even if mentally or kind of like hypothetically, again, this is where my comment to Doc isn't really more specifically about Doc, but it's something that I've had to deal with myself in terms of like the market doesn't give two fucks or two shits what I think or how I think it should act. Right now, the probability of the risk range on the VIX is to just over 21. So if you get around 21, or let's say 22, it would behoove you to cover some of your shorts, right? Especially if you're playing it via options or some form of kind of derivative play, that kind of thing. Those have beta burns, decay, all that kind of stuff, right? So you really want to kind of be conscientious of what is in the portfolio, and then what is and how you're expressing your longs and shorts. So again, in a VIX environment that we're in right now in the chop, that's one thing of understanding, right? So just because you may hypothetically expect or think that you're going to go to 26, 28, 32 on the VIX, kind of just got to play the game that you're in, and you can always add back to a position or portfolio or a core asset at a slightly lower price or higher price, right? If it continues to confirm that trend in the right direction. And so that's another big piece too, is making sure that you're sizing things up appropriately, right? So taking things to close to your max or close to your max, and then giving yourself that flexibility and breathing room to cover some, to sell some when you get to sort of the immediate term, aka the trade duration shifts in kind of in the position, right? So again, if you're only getting to your mins, then you really only have one decision there that you can make: either sell it all or keep it on, or aka really add more, I guess, right? So if if that's where you're at, then it's going to be hard to touch the position in a more ongoing incremental way like Keith does. And again, this is something where I have learned a lot from him in terms of how to continue to pay yourself, and that taking small wins over time, that was absolutely compound. And so it's people kind of shit on him for the, basis points positive gains on the long and short side. But if you're on a 30 win streak, that capital absolutely compounds and you're knocking the dominoes down. Again, another shout out to Chris, who uses this analogy a lot. If you get the first domino right and you knock it down, then you're just playing with more capital at hand. And then all of a sudden your 25, 50 basis point position increases. And then if you get that one right and you get it right for 1%, 1%, that 1% is a lot more capital in terms of a compounding standpoint than if you say got the timing and sizing wrong on the first one, and then you're kind of playing on your back foot. So in sports, we love using sports analogies here, playing on your front foot and attacking the net, or, trying to attack that defenseman or what have you, however you want, whatever analogy you want to use, right? Being, golf is on my mind lately. So if you want to get a little bit more aggressive, right, in terms of cutting the corner off the driver, if you're just really feeling it with that driver that day, or maybe you're not feeling it with the driver that day, and you need to play it a bit more conservatively so that you actually get the ball in play to give you an opportunity to get on the green because your putter's hot, right? So maybe you got to just adjust to what the game is showing you, right? And how you're. So I think I've butchered those analogies there, but I think you get the point. Play on your front foot. If you can play on your front foot, then a lot of the game, the rest of the game kind of it just becomes a little bit easier. This game is really, really bloody hard, but trying to get it a little bit easier is really helpful, and certainly makes it a lot more fun. So I'm working on this. Jay Brett, this is something that I'm working on every bloody day. I screwed it up this week a little bit. I should have covered more on what was the down day? I guess Wednesday. Should have covered more on Wednesday on the chop, right? We got a little pop, and I didn't cover enough. But again, it doesn't mean I'm going to go, and I'm not saying you're crying in your milk, but I'm not, certainly crying on my milk. I'm actually licking my chops, which is why I'm trying to, maybe keep this a little bit tighter. I'm not doing such a good job of it today. So I'm licking my chops because I think this is an absolute unbelievable opportunity. And you heard it in Keith's voice. I tweeted this out. You heard it in Keith's voice. Keith's voice on the call today on the macro show. He sees an awesome opportunity for Hedgeye Nation, given all the work that we do as a team here, and that you do it within the nation. This is an opportunity for us to go out and seize the moment and try to win another championship.